Hi, good morning, everyone. This is John Malika, the host for today's webinar. Thank you all so much for coming. We're just going to wait just a moment. There were about 27 people that registered, so maybe we'll just give them a moment to find their way in. Hope everybody is having an awesome week so far. It's Friday, so that's a good thing. But yeah, so let's go ahead and get started, and anybody else that comes in can join us. Good morning, Louis. Yeah, so a couple quick housekeeping items, and then we'll get right to the webinar. You absolutely can ask questions. I am giving this webinar by myself this morning, so I won't be able to answer questions until the very end. So I appreciate your understanding and patience, but absolutely put your questions in writing. And then again, at the end of the webinar, I will go ahead and answer all of your questions. And if I don't know the answer to any of your questions, then I'll find the answer and give it to you after the fact. Because one important thing to remember with the stimulus coming from the federal government is this stuff is changing constantly. I mean, even the last act, the CARES Act that came out, had change after change after change. I don't know if any of you, I know we've worked with a good amount of our clients, and I do see some existing clients in here. So welcome and thank you for coming. You know, we saw instances where the way that you applied, for example, on the PPP, which if you remember was a big part of the CARES Act, the way that you applied for forgiveness for the PPP changed over and over again. So, you know, this stuff, it's really a moving target. So the goal today is to bring you all up to date, to make you aware of what's available for you for support. And yeah, again, answer any questions that you might have. So let's go ahead and get started. Oh, one more thing. At the end of the webinar, I'm going to take an account of the emails of whoever is in the webinar until the very end. And one lucky individual is going to receive an email from us, and it's going to invite you to a free tax plan, which is where we determine in your specific case what is available to you to reduce your taxes. And we often will save $15,000 to $25,000 off of your bill. So definitely a high value service that we offer there. And everyone that attended today, just for coming, is going to get a copy of our second ebook, which is 20 ways to save on taxes. So even if you don't get tax plan, at least the book will set you in the right direction as to what you can do to reduce your tax bill. So let's go ahead and get started here. And really the focus on the stimulus is to financially survive the pandemic, which has been absolutely horrible. I mean, I've spoken to business owner after business owner, and I've never seen anything like this. I'm 32, so now, you know, it's not like I've been around for a very long time, but in my lifetime, this is the craziest thing. So, I mean, where we were able to connect business owners with support, but unfortunately there are instances where there are gaps and there's just nothing there. So I want to make sure that everybody that is here today understands what's available to you, and know that you need to ask for help. If you are in a spot where your money is running out and you're not sure what support is available to you, do not wait. The quicker you act, the better. Your focus should be on saving your business. So, you know, the three benefits, three of the big benefits that have come out from the federal government so far have been the EIDL, or the economic injury disaster loan from the SBA, the PPP, and now if you've gotten the PPP, which was the Paycheck Protection Program, you may be eligible to get a second draw, and the second draw can be forgiven just like the first can, which is a big deal, especially for those of you that have a good number of employees. So this is what's available, and just to look at a timeline here, we had the November 3rd elections. By that point, we had the FFCRA, which was the family's first coronavirus response act, and then the CARES Act. Now we've come to year end. We're 2 weeks into 2021. We're hoping it'd be a normal year. It started out a little nuts. Let's see what happens from this point. But we have been introduced with additional relief. That is what we're speaking about today, which is the coronavirus relief and Omnibus agreement. You know, what comes next? We've got the inauguration. We're going to have the April the 15th deadline. And then it really gets into what will the tax environment look like for small business and franchise owners after Biden starts and comes into office. So we are laser focused on stimulus and the tax environment, because there's just a lot of change that is going on right now in this space. We're going to continue to bring you all this information. The webinars are going to become a monthly thing, so you'll be seeing more information on those and the topics that we're going to cover. You know, so this is a framework of how things are going to look over the next 3 to 24 or more months. We don't know how long this is going to last. And that's really a big part of what makes this difficult to deal with. And there's just a lot of frustration surrounding the pandemic, you know, the uncertainty of knowing when this is going to end. But while we don't know when, we can guess, we can predict how is the recovery going to look. And really there's 4 mindsets when it comes to the recovery. We either think it's going to be a V-shaped recovery. If anybody follows politics at all, President Trump was saying that he believed it to be a V-shape. You know, it might look more like a U-shape, where we don't have an immediate return to where we were, but over time, eventually we'll get back to where we were. So maybe over 5 or 7 or 10 years. You know, we could have an L shape, which is really a depression where we crash and stay down. Let's, you know, pray and hope that that's not the case. And then, you know, this is a mindset, and this is probably what I most agree with in looking how everything is going, is really a K-shaped recovery. So if you're in digital media, for example, think like Netflix, Zoom. If you do online delivery like Amazon, food delivery, things like that are exploding. So they would be in the upper end of this K. But now think, a big one that got hit is the movie industry, theaters. I know a lot of them around where we are here in South Florida have permanently closed because no one's going to go see a movie if you think you're going to get, a serious illness. So but we don't know for sure what the recovery is going to look like when all is said and done. These are just the potential way that things could go. Let's assume if things die down, the vaccine comes in and makes a big difference, and daily cases begin to go down, then really in 1, 2, or 3 months, we could be back to somewhat of a normal from where we are now. But then, what also could happen is things could get worse, and we could see the cases go up more, which they have been if you've been paying attention. So it might look more like 4, 6, 9, 12, or 18 months before we recover and get back to normal. So, as a business owner, that kind of puts you in a difficult spot. Most of us didn't think it would go on for as long as it has, and we're not out yet. And think about for your individual case, everybody just think about themselves and their business and the state of things as they are today. What would happen to you if this continued on for another month? The shutdowns, the lessened economy, the capacity reductions. We've got a client over in Colorado that unfortunately is only able to operate at 25% capacity. But that doesn't also mean that her expenses are reduced to 25%. There's rent, there's fixed expenses that don't change. Another month in her case is detrimental. Then we got to think, well, what happens if it goes on for 4 to 5 months or 12 to 18 months? We don't really know. A lot of people thought that this would be contained in 2020, and things haven't gotten much better for us here at the beginning of 2021. But I'm hopeful. Let's see things turn around. Either way, it's not really a feelings thing. It's just an objective thing. What should you do to be prepared if this were to go on for 1 more month, or if this were to go on for 18 months? And what we tell people is safety first. Your family, keep them safe. Whatever you can do. The very next thing to think about is do everything in your power to save your business. Your business is the way that you can make money and build wealth and pull yourself out of any spot you might be in. But if you lose your business, then we're in a different spot, and so we need to take advantage of anything available to survive. The truth is, disasters have come year after year. Although this has been a big one, but we have seen them happen before. And most people just sit on the sidelines and let the world happen to them. But right now, what we're trying to do is helping anyone affected by COVID-19 to navigate through this confusing time. A really quick word on us, how we got started. My franchise, CPAs. It was me and the other owner of the business, Jason. We met when we were working on our master's in accounting. We went and worked in the field, and we reconnected a good about 7 years after the fact. We both were at a point where we wanted to leave industry and become entrepreneurs and open our own firm. We got connected through to the franchise industry through an old friend, And what we really saw was a great a gap in business knowledge. And so that's what we're aiming to do. Our mission is to help franchisees to succeed, to essentially to fill that gap. So let's go over what we're going to cover today. The first and we're going to cover is the Paycheck Protection Program, which is the forgivable loans. And we're going to look at what it would look like if you're going to be a first-time borrower. And we're also going to look at the second draw and what's available to those of you who've already gotten the first draw. Again, as I mentioned earlier, you potentially can get to draw again, and we're going to look at what the requirements are. We're also going to look at the EIDL, which is a loan administered directly by the SBA. It's a second form of support. That was actually the first form of support that became available. So we'll look at that. That's the 7B, and then some other items here. If you're unable to obtain these two programs, you also can go for the employee retention credit, which is if you are an employer, you actually can get a credit against your taxes if you kept employees in spite of the pandemic. So it wouldn't be available if you laid off a bunch of employees, for example. But we'll go into that more. There's also the ability to defer employer payroll taxes all the way to the beginning of 2022. And then there's looking at, what are you doing to manage your cash flows during the current environment, during the pandemic. We'll take a look at what the tax environment is going to look like under Biden, and what additional relief is available. And then we're going to go over a really a great benefit to anybody who's looking to buy a business or to get additional debt from the SBA. They have a special program that they're opening up on the 1st. So we'll go into that as well. So this is everything in a nutshell. What is available under the PPP, the PPP2, and then the EIDL. So if you are a first-time borrower and you've never gotten the PPP, you are able to obtain a loan up to $2 million. No, unfortunately, you don't just get to say that you want 2 million. You have to qualify for that. And what they look at is 2.5 times your monthly payroll cost. So, to get to 200 million, you would need like 800K, let's say, in monthly payroll to get to the 2 million. So if you have a monthly payroll of, let's say, 50, then you would get a PPP loan of 125 grand. Now that loan can be forgiven, but in order for that to be the case, you have to use the funds that you receive for payroll, and then a couple of other qualifying expenses, like rent, and insurance for your employees, and any other expenses that you incur on the benefit of the employee would all count to be able to get that full forgiveness. So a couple of other things. If you don't have employees, if you're just a one man or a one woman show, you absolutely can get the PPP. As mentioned here, sole proprietors, independent contractors, and self-employed individuals, you can get the PPP loan. And you have to have less. This is just kind of saying again, you have to have less than 500 employees. So really, the focus of the PPP is more on small business. If you happen to, I don't believe there's a non-profit or a church here, but if you are, you absolutely can get the PPP as well. So don't think that you can't. Every loan that you get, and this goes for the PPP-1, the PPP-2, and the EIDL, the SBA will look at everything that you do, and they'll check in to make sure that you're actually eligible. So I recommend follow the rules. Don't try to apply for something if you're absolutely sure that you're not in the category to get that. And when you're doing the paperwork, make sure everything is perfect, because if they see one issue, they'll send it back, and then you'll make the correction, you'll send it back, they'll put you back in queue. And right now is not a time that you want to waste time. If you think about your cash flow and saving your business, you do not want to wait on what's available to you. There isn't an interest rate on the PPP. It's currently 1%. But if you get forgiveness on 100% of the loan, you don't pay anything. Now, if for whatever, if you're not able to get the forgiveness, you might have gotten the PPP, but you did not use it on what you were allowed to use it for, which again is actually paying your employees their insurance and everything that goes along with your payroll expenses, as well as rent, utilities for the business, and qualifying interest. Anything else that you used it for, you might not be able to get forgiven. So again, it's very important that not only you understand how to get the PPP, but you understand what to do with the money after you get it in order to not have to pay a dime back. Because why would you want to pay that back if you don't have to, right? So this really, if anybody got the first round of the PPP before June 5th, the maturity on that loan was 2 years. They increased it to 5. That was a while ago that they made that increase. But so just know, if you did get an early on a PPP, to not wait on getting the forgiveness. Okay, so that was the first round of the PPP with the new rules. Now let's get into something I think a lot of you will be interested in, is what about the second draw? Who gets this twice? So it really is only for the hardest hit borrowers. You had to have had a 25% reduction in gross receipts in the first, second, or third quarter of 2020 in relation to 2019. So if you had a great year in 2020, then the second draw is not for you. If you at least had a quarter where you took a decent hit, perhaps April, May, June, or the second quarter, that was after the, if you guys remember, that was when the pandemic, who doesn't remember that? That's when the pandemic became a big deal in March. You might have shut down, taken some time off, or were obeying your city rules or state rules, and were staying home and not operating. Well, then you would have a quarter in there where you saw a significant dip. This is for you. So, the first thing I would do after we get off the webinar today is to print out your P&L from 2019 by quarter, print out the same P&L by 2020 by quarter, and compare. And if you at least had one quarter that dropped by 25%, then again, you are invited to apply for the second round of PPP. And this one is for even smaller businesses, so 300 employees or fewer, as opposed to initially the 500 employee line. You have to have used, in order to get the second draw, you have to have used or will use the full amount of the first draw. And then, you know, as well with for the first draw, you have you're subject to review by the SBA. So that's the PPP, the round one and round two. One thing I didn't mention about the PPP, if you happen to be in the accommodations or food service industries, then you can actually get 3.5 times your payroll costs for your average, 3.5 times. So that's the PPP. The economic injury disaster loan is the EIDL. The maximum loan amount of this is $2 million. Just like with the PPP, you do not get to apply for $2 million. They calculate this, and the SBA has never released an official, this is the way that we calculate it, but we kind of figured it out, and it's 50% of your gross profit from 2019. This has been a fairly accurate test. So if you look at your P&L from 2019, look at your gross profit and multiply that by 50%, that is a rough estimate of what your EIDL will come to if you do apply for it. Oops. Now they're bringing back initially when the EIDL came out, there was a $10,000 grant, and this was free money essentially. You got to keep that, and then in addition to the grant, you got the loan, and you have to pay back the loan. But the grant was free money that they gave initially. That ran out super fast. And so they limited then to 1,000 times the number of employees, and you would count as one. So, you know, if you had if you were working in the business and had five additional employees, it'd be a $6,000 grant as opposed to the full 10. So what they've done is they've opened back the application process to get the grants. And then if you got the grant beforehand and you got like a limited amount, like $2,000 or $5,000, they're opening up a way for you to apply to get the full 10. So you get the gap. Whatever the gap was that you didn't get at the 10, they're opening a way for you now to get the full 10. And like I mentioned at the beginning of the process for all this is constantly changing. So they haven't actually released a process yet to apply to get that gap, but they at least announced that they are going to. So keep an eye out for that, and we will absolutely update everyone as soon as we get an answer on that. So now another thing, the PPP loan, when you originally got it, you had to, in applying for forgiveness, you had to deduct the amount of the advance that you got beforehand. So let's say you had a PPP loan of 100 grand and you got the full EIDL, the grant amount of 10 grand, they would not allow you to get forgiven on the full 100 of the PPP. You had to go 100 minus 10 to get to 90, and you would not be able to get forgiven on the full 100. You would only be able to be forgiven on 90,000 of your PPP loan. They are doing away with that. So regardless of if you got the grant, now you can get forgiven on the full amount of the PPP. And if you already applied for forgiveness and deducted the amount, they're going to release a way for you to get that back. So they're not, what they're trying to avoid is screwing over anybody that entered the process at an early point. So I'm really impressed with the way that they put this together. I believe there were a lot of gaps for business owners, and it seems like they've done a decent job here of filling them. Now, what can the EIDL be used for. You can use it for your debts, payroll, your AP to pay your vendors, and other bills affected by the disaster. Now, the interest rate for the EIDL is great. So the typical SBA loan, and some of you out there, you might have an SBA loan. The interest rate is right around 7 points. The EIDL is about half that. So you can see there it's 3.75% for small businesses. And then the last point here, you can see it's a 30-year term. So the typical SBA loan is 10 years. Take a 10-year term and take a 7% interest rate, and you're looking at like $1,600 to $1,700 payments every month. Whereas the EIDL, it comes out to more of about $600, because again, of the interest rate is half the amount, and the term is 3 times the amount of the typical the SBA loan. Another benefit to the EIDL is that you do not have to make a payment for an entire year. So if you get the EIDL today and it's 100 grand, you do not have to make a payment on that loan for 12 months. After which point you do have to make payments. And again, it's the 30-year term and 3.75% interest rate. And that is the EIDL. So a couple things here. Expenses. So this is an important thing. A bad thing about the PPP before was that if you got forgiven on 100% of the PPP loan, you would not be able to deduct the expenses. So the payroll expenses, essentially, that went into computing your forgiveness, you would not be able to deduct those expenses against your taxes. Now that has been changed, and you absolutely can. So there's not going to be a tax, like a negative effect to you for being forgiven on the PPP. So you can deduct, are tax deductible. The expenses are tax deductible, even if you get forgiven on either loan. So you get that full benefit for the round 1 and round 2 of the PPP. And just to be extremely clear, the PPP is eligible to be forgiven. The EIDL is not. At this point, if you get the EIDL loan, you do have to pay that back. So just so you're aware of that. A couple of the other benefits, you've got the employee retention credit. And it's eligible in 2020, you're eligible for a credit of 50% of your qualified employee wages, and that went up to 70% in 2021. And you can include up to 10K in wages per employee per year in 2020, and now they've increased that to looking at it on a quarterly basis. So 10K in wages per quarter. And so that would amount to 40K a year. You can take 40K times 70% and whack that against your taxes. So this is huge. Now, this is only available if you did not also get the PPP. So very important, and that's why it's important to work with an expert in applying these things, because you might go ahead and get the PPP and miss out on the ERC, or the other way around. So it's just like the first round of the PPP, the ERTC, this credit is available to businesses with less than 500 employees. Now, so this is an update. So you can now accept the PPP, but the wages that went into the forgiveness of the PPP cannot also be applied to the employee retention credit. So this is huge, but before it was, if you got the PPP, you cannot get the ERC. And now it's, well, you can get both, but you just can't apply them to the same, the wages that you used for the PPP. Now, in order to be able to take advantage of this benefit, it's not for everyone. You must have been fully or partly closed and or have a 50% in 2020 and a 20% in 2021 drop in quarterly gross receipts compared to the same quarters in 2019. So again, go to your QuickBooks or your Xero, whatever you use for your accounting. You print out your quarterly P&Ls, compare 2019, 2020, and soon, you want to be comparing that to 2021 as well, and stay on top of that, because that's exactly how they're determining whether or not you're eligible for certain benefits. Another benefit which I'm iffy on, I'm honestly, I'm not a big fan. This is the employer payroll tax deferment. So this does not this is not going to remove your taxes. So it's not like the employee retention credit. A credit is a directed deduction against the tax that you owe. A deferment, that just means you don't have to pay it today, but you do eventually. So, and they allow you to defer your employer portion only of Social Security, so not on your Medicare, but the bigger portion is Social Security. You're able to defer that as the employer and not pay in until the 1st of 2022. So, essentially about a year from now, you would have to start repaying that. So, when would that be a good idea? If there's nothing else available to you and you absolutely need to save money now, take it. If that's not the case, if there are other options available to you, I'd recommend going through and exhausting some of the better options and looking at this as more of like a last resort if you're really in a tough spot. And then in addition to these, there's also the 7A loan, which is the SBA, the 504 microloans. There are state loans and grants. So I'd go straight to your SOS site. I mean, we here are aware of a bunch of these, but you definitely go out and do your research as what's available from your state and your city. So the local side. There are private grants, like from businesses, for example, that are trying to help small businesses. Certain items available from banks, non-bank lenders. And then, and this is just a tax change. So from this year going forward, 100% of the business meals that you consume are deductible. That's the way it used to be, and then they reduced it to 50%. That was like a decade ago. It's been like that for a long time, and now they just brought back as if you think about it, restaurants got hit super hard. 25% capacity. Everyone's afraid to go and eat there. Now you have to have a delivery, as they had to essentially update their businesses for this current environment. So they got hit hard. So they wanted to give a benefit to encourage us to eat at restaurants. So that's that. And so, additional support, some other things you want to consider, especially if you don't have a lot of, if you're a newer business and you're not quite sure at this time what you should be doing or what to do first. You might need some help looking at your cash flow, your runway, cash management and coming up with your estimated taxes in this strange time. You might need help forecasting and budgeting. You might need help going through debt restructuring. There could be a benefit there for you. And really determination of when and how much funding are you going to need to get from here to there, right? So to get out of this moment in time, hopefully this brief and temporary moment in time to a better place, kind of back to normal. So what are you going to need there? And then another thing to consider is Biden now is going to bring some significant changes to the tax environment. I don't know how much you've all been paying attention, but the Democrats won the Senate. They beat the majority vote now with the vice president. So they're going to be able to do significant things here over the next 2 years. And one of the top items on the agenda is to do away with the tax cuts that President Trump brought in, and now typically when Democrats come to office, it is an increase in taxes, an increase in support and benefits, right? So that's nothing. That's not a controversial thing to say. So we should see an increase in taxes. So we are on top of that, and we're going to be looking at, well, what deductions are going to be the best now, considering the increases? What can you do to change your legal entity and structure now that's going to benefit you when the changes hit? How is this going to affect retirement, and how is this going to affect all the previous acts that were under Trump? The TICJA, or the Tax Cuts and Jobs Act, the FFCRA, and the CARES and the Coronabus. How is this going to affect insurance and asset protection, and what you should focus on? What new legal loopholes are going to spring up, and what old ones that we used to rely on are no longer going to be effective? Is there anything specific to your niche that can help you with the changes, and a number of other things that we're going to look at. So just a little more detail on the PPP. Again, it's for up to $2 million. If you use the loan for payroll expenses, rent, utilities, and mortgage and interest for the business, not on your home, then you do not have to pay the loan back again. It's 100% forgiven. Now they added a couple of categories that were not available before the recent changes, which include operational expenditures, property damage expenses, and supplier costs, and worker protection expenditures, which we all know what that really is getting at. Did you buy masks? Did you buy hand sanitizer? What did you do to imply social distancing? All of those expenses will be able to be applied toward the forgiveness of your PPP. And again, you can't just get the 2 million. It does depend on your monthly payroll costs. In order to get the loan, you're likely going to need your payroll information up to date. So if you use like ADP or Paychecks or any of those, then you're perfect. You'll just be able to print out the reports from their apps and be able to provide that in order to get the PPP. There's also an underwriting aspect. So you might apply for the PPP and be denied. This is a process that we are on top of, and we're always looking at, well, what can we do to increase the possibility of being accepted here? Because again, you don't have time to waste. And then in order for the loan to be forgiven, you have to prepare an accounting package. So I've gone through this already with a bunch of our clients. It's different for every bank. So depending on the financial institution that you use to get the PPP loan, you have to be familiar with their process. And this is important because if you do this right, you're going to get forgiven. You're just going to get, essentially, it's free money. You do not have to pay taxes on the money that you borrow and are forgiven. So you want to get this right is really the point. And then again, the 7B is the EIDL. This can be up to 2 million. It can be used on all operations except growth. You can't get the emergency loan to save your business and then invest that to grow the business. It's really to maintain you during a turbulent time. So what do you have to have in order now in order to go ahead and apply for the PPP round 2, as well as the EIDL? You have to have your articles of incorporation or organization ready for every entity that's going to borrow money. You have to have an operating agreement in place. You have to provide the driver's licenses of every owner. Depending on the lender, you may need a revised a business plan. They do want to make sure, yes, this is emergency funds, but are you going to be are you going to be able to continue on as a going concern, or is the business in a rough spot? You may also need your forms 940 and 941, which is where you report taxes paid to the federal government for Social Security and Medicare and withholdings. They're also going to ask for a payroll, a summary report for the entire year, and then the quarters that are within the covered period of your PPP loan. A certification that all employees of yours are living within the U.S. You may need to provide 1099s. A trailing 12-month P&L and your accounting has got to be up to date. If there are issues in the accounting, it will get kicked back. So definitely make sure that your accounting is always up to date. You might need your most recent statement for the mortgage and perhaps a rent statement, and then your utility bills. But that's if you included those expenses to get the forgiveness. They're going to ask for that stuff. You want to have at least the copies of your 3 last tax returns ready and filed and handy. They might also ask for a transcript. So there's just a couple of items. You definitely want to have your balance sheet, your income statement, and statement of equity and cash flows ready and prepared. And really the biggest problems that we see in people going through and getting a loan are finding a bank that's actually funding. So banks in this process, they were running out of money, and so our clients would have to bounce from bank to bank in order to find one that funds. Coming up with the maximum amount that you can borrow, and this is an issue. If you come up with a lesser amount, well, then you are shorting yourself. You do not want to miss out on getting 100% of what's available. We see in general getting your documents, your tax returns. It's always like, it's a hassle, John. Why do I have to give you all this stuff? But that's why you want to have this ready to go. It shouldn't ever have to be a thing that you have to stress about. You just should always know where the documents are that you could need. Again, your tax returns, your operating agreement, your articles, all of that should be clean and together, especially now in a disaster time, right? When that could be the difference between you getting funding or getting nothing. So again, you want to get the documents together fast. So the quicker you apply, the quicker you get a spot in line. So that was another thing. A lot of people would apply for the PPP and the EIDL, and they'd apply too late and miss out on everything. So we're telling everybody, again, if you're eligible and this is something that you need, do not wait, apply today to whatever is available. You know, of course, there's always the issue with run to banks that that will not answer or not responsive, and some even give advice that goes against what the literature says. Unfortunately, we've run into that. So to be successful in getting your funding, again, you want complete and accurate applications. Always look to the best lending option, which is constantly changing. Apply within hours of any change. So if they say that there's a round 3 of the PPP, know that immediately. We know that, and we'll let you know so you can go and apply as soon as the becomes available, and determine how much you need and if you need more. And once you get the money, determine the best way to spend it, again, to get that for forgiveness. And there's a bunch more. There's the city of New York loan, San Francisco, and Massachusetts, Florida, Michigan, LA, Denver. There is support all over the place. You have to go out, find it, or you can ask us for your local area, and we can help you with that. We are staying on top of the evolution of the loans, the qualifications, and requirements, so you don't have to. And know that another benefit, if you are if you're looking to start up in 2021, or you're an existing business that is looking to expand, another benefit now, the SBA is giving any new express loan or SBA loan in general, anybody that is funded between the 1st of February and the 15th of September. It's around the 15th. That might not be the exact date, but in general, in that period, will not have to pay the first 6 months, and those six months are forgiven. So it amounts to about 12 grand in free money, essentially. If you fund a loan between the 1st of February and the 15th of September. And if you already got your loan before September 2020, and you already they actually did this before, then you're going to get an additional 3 months. So a total of 9 months of forgiveness. And now to qualify for the SBA loan, you have to have a decent credit score. 600s are usually not okay. I don't know the cutoff point, but in general, we see the 600s are typically not cutting it. If you have assets, that's always a good thing. If you have equity in your home, or you have a retirement account, that increases your chances. Not having other significant debt is definitely a good thing, and having a solid business plan. Now, when it comes to SBA funding, your go-to is First Financial. They help small businesses to get SBA loans. They're friendly and fast. And again, if you're a new business or existing and you qualify, we can look at the points again. If you qualify for an SBA loan, if you meet the minimum requirements, then you can connect with them and ask about the 150K express loan. If anybody is interested to start up a business or to fund an existing, then you can send a message to info@myfranchisecpas.com, and we will get you connected to them. just a quick update. The IRS will be increasing audits by 50% in 2021. So just to let you know, and this is from an article from Bloomberg, you know, 2020 was a crazy year. A lot went on. The PPP, the EIDL, crypto and Bitcoin exploding. I don't know if any of you have been paying attention to that. So taxes are going to be a little crazy, and that's why they're increasing the audit. So if you're not, if you're doing some things that you think might put you in a gray spot, like you have some Bitcoin or you got the PPP, you're not sure what to do on the tax side, we can help you. So again, if you're doing anything and you think that you might be an audit risk in 2021, you do not have to go that alone. The prizes. Okay, so as I mentioned at the beginning, I'm going to send an email to the winner, which will be a randomly selected participant at this point. So I have the list here. Just give me 1 second. Okay, so only the current attendees can win the tax plan. So you'll, one of 12 of you will be receiving an email with that. And then everybody who attended today, we're going to send over a copy of our second ebook, which has tips that you'll be able to apply to save money on your taxes. All right. And to get in touch, that we're constantly on the phone. It's really hard to get through with a random call. The best way to get to us is sending an email to info@myfranchisecpas.com. And you can also book an appointment with us at calendly.com/save on taxes. So at this point, I'm going to go over questions. I see there's quite a few things. Okay, so good morning, Louis, Susan. Great to have you guys here. I appreciate you attending the webinar today. We're gonna make this a monthly thing, and just keep trying to give more value out to you guys. So. So Lewis asked, is the SBA 7A forgivable? And the answer is yes. So the SBA, the 7A, the PPP, yes, is a forgivable loan. Now the standard, the SBA 7A, which is the one I mentioned that we work with for First Financial, the entire thing, no. But you are eligible to get up to 6 months forgiven. Again, if you are funded before September of 2020, or if you fund between the first of the following month or 2/1 to 9/15/2021. If you fund in that window, then you can get six months of forgiveness. So you're saying that you got funded in December. So okay, so I see what you're saying. You fall in that gap. I believe that you will get the forgiveness beginning in February with everyone else that funded. As of the first February, but I'm going to confirm that and send you an answer directly. So let me make a note of that. Okay. The name of the lender was First Financial. So actually, I'll write it in chat. That'd be better. Okay. Thank you. Thank you guys for the kind words. Larvell and Aaron, Maya. Thank you guys. I really appreciate you being here today. I think there's just a few more here. So 3 more questions if you guys will bear with me, and then we'll call it a day here. From Becky, we changed banks, and now we use a bank that is different from the one we received the round 1 PPP loan from. Do you know if we would be able to apply for the second round from a bank that is different from the first? To my understanding, yes. You do not have to stay with the same bank to get the second round. Now, it might be easier to work with the same because they have all of your paperwork and they worked with you already. So you might have to establish that new relationship. But if that's not an issue to you, then yeah, there should not be a reason that you cannot work with the second bank. And second question here is, we are a fiscal year end for the second round of PPP. Do we need to determine a 25% loss by calendar quarter? I'd go with the fiscal, because that makes more sense for your business if that's the way that you look at it, and not on a calendar year. Good questions. It's great. And then we got one more here. Can you retro the ERTC? So that was the employee retention credit for 2020 if you did not do it at the time because the rules were different. If so, what is the next step to start the process? So the ERTC came out pretty early in the it came out with the CARES Act, so it's not new to the new stimulus that just came out. So it was available in 2020. Now, if you haven't gone and applied it yet in 2020, I do believe you can go back and apply it, or basically get what it would have come to you. But I want to make absolutely sure on that. I know we're working together on a tax plan, so that will definitely be something that we go over with you there. Okay, so I know we went over a little bit on time. I appreciate for those of you that stuck around until the end here. If you didn't, I understand as well, because everybody is busy, right? So if you do have any other questions, you can send us an email again at info@myfranchisecpas.com. I'm going to put it here in the chat. And then you can also book a call with us directly here. Now soon we're going to be releasing the information on our webinar for the following month. So really excited to get you guys out some more information and go from there. So thank you all so much for coming today. I hope you have an awesome day and a weekend, and we'll see you soon. Take care.